The Laundry is proudly produced by Strise, your AML automation software for faster onboarding, smarter monitoring, and growth without overhead.
No single party is ever going to see the whole picture. Banks can see the transactions, regulators can see all the different filings, law enforcement can see their investigations. But right now, all of that intelligence lives in a sort of separate, siloed environments. You're looking at an elephant from different views, right? One person's got the trunk, one person's got the leg, and you don't really see the full animal until you put all those pictures together.
Your money make a world go round.
Welcome to The Laundry, the podcast connecting AML compliance and financial crime to the real world. Ladies and gentlemen, we have a financial crime crisis going on. This isn't a global war, political corruption scandal, or terrorism, but it absolutely connects into all of those too. This is about everyday people who are coerced into money muling via flashy social media ads. Recruited to transfer dirty money through their bank accounts, turning it into seemingly clean cash by obscuring its origin. Many banks report that cases of money muling are skyrocketing globally, but why? And what can data tell us about this problem? I'm your host, Lycka, solution architect here at Strise, and in this episode we are asking, can data help solve the money mule crisis? We'll be discussing how the money mule issue looks today, how it connects to the wider financial crime ecosystem, and what the data can tell us about combating this issue. To dive into this topic, I'm here with MJ, Strategic Product SME from Napier. MJ is a certified anti-money laundering specialist and financial crimes compliance expert with more than 10 years of experience in designing, enhancing, and implementing AML and sanctions compliance strategies. He has previously worked at global financial institutions such as JP Morgan Chase and Standard Chartered Bank, as well as KPMG and Grant Thornton. He now works at Napier AI, one of Strise's strategic partners in fighting financial crime. Welcome to The Laundry, MJ. Thanks for joining us here today, all the way from the USA.
Thank you, Robin. Really appreciate the intro. Great to be here. Really excited.
Do you want to say a couple of words about what you're doing at Napier AI today?
Sure, yes. So my role with Napier is essentially to lead product strategy for the North America, Latin America region at Napier AI. So sort of my role kind of sits across product as well as sales, marketing, and overall just kind of go to market to help drive product strategy, roadmap alignment to ensure that the product is aligned with the needs of the industry as it is sort of required within the North American market. So Napier being a UK-based organization, now we're sort of expanding into North America and some other regions. So I'm here to help kind of guide the product to ensure that it's fit for the North American market.
Perfect. Thanks for that. And let's dive into the discussion. Let's start at looking at the issues around money mules today. So MJ, you've been in the financial crime sector for more than a decade. What's changed when it comes to money mules in that time?
Yeah. So when I think about, sort of how money muling has changed in the last decade, it's really, I think, two big shifts. It's digitization in social media. So, 10 years ago, a lot of this sort of activity was still physical. You'd literally have people carrying cash or sending wires between local accounts. Now it's almost entirely digital. So, that's really kind of changed everything, especially during COVID. So when borders closed during COVID, cash movement got much more difficult. I think we saw a real pivot. And so criminals needed a new way to kind of move value. And they found that online, essentially, still through people, but just in a more digital way. And so I think what's really kind of wild is how easy it's become. So they don't really need to find someone on the street anymore. They can just post a TikTok ad or something on social media that sort of promises a quick side hustle, and a few clicks later you've got a money mule. It's almost sort of a recruitment as a service. So people getting pulled in, most of them aren't really hardened criminals, right? They're just regular people under pressure or sort of unwittingly pulled into these sorts of schemes. Students, older folks. I think the other thing is that because it's digital, it feels sort of abstract. So you're not touching a bag of cash. It's just sort of numbers on a screen. And I think the distance makes it easier for people to rationalize what they're doing, even when they know it's kind of shady.
I guess the digitization and the global approach has obviously developed over time, and we've talked about on the podcast. We've talked about social media as enablers with Telegram groups, etc., and how quickly it has become now with vibe coding as well. So it's interesting to say the least to see the developments over the last couple of years, and I can only imagine for you that's been in the industry for so long. Like I've merely delved my big toe into this industry for the last, well, say 4 years. Even me, I can see a lot of developments. But we often think about money muling as one technique, but it is very multifaceted. Can you say a little bit about what connects all the different approaches and what are some of the basic elements to money muling?
Sure, yeah. So I think at the core, every money mule setup, right, no matter how complex it looks, basically has three things in common. So someone gets recruited, either wittingly or unwittingly. Money flows through them, and then the trail of funds kind of gets layered to make tracing the source much more difficult. So whether that's a student on Instagram, a small business that gets tricked into acting as sort of a middleman, or an elderly person responding to like some kind of fake text message or fake delivery text. I think it's the same underlying structure every time, right? The first step is always going to be recruitment. That's kind of the hook. So it could be an ad, it could be a job post. I don't know about you, but here in the States, we all seem to get text messages on a daily or multiple times a day. I'll get some sort of text message from someone telling me that there's a great opportunity for a remote job. And just click the link and you can be earning up to $1,000 a day. Or they use some of these sort of outlandish claims.
Actually, not very common at all in the Scandinavian countries to get text messages. I don't even think kids use text messages anymore here. It's all on social media, Snapchat, TikTok. That's where it happens, as far as I know.
Yeah, I don't think they've limited to anything, right? So you'll find it on social media, you'll find it on TikTok, you'll get emails, you'll get text messages. Somewhere, your data's been leaked, so they've got your number, they've got your email, and they're just going to use it. You're kind of on a list, and until you block that number, you're going to continue getting those messages. It's just kind of a volume sort of numbers game for them. But again, the first step is really kind of always recruitment. So once they've got you, then they move to the transfer stage, which is sort of funds in, funds out, usually pretty quickly, and then comes layering, right? So it's multiple hops between accounts to break the audit trail, and that's sort of how the money gets clean. So what connects it all is essentially criminals are trying to outsource the risk, so they're turning regular people, ordinary citizens, into disposable parts of a laundering sort of pipeline. And the mule is just sort of the moving piece. And once they get their accounts flagged or closed, the network just recruits someone else.
How does it tie into the wider financial crime ecosystem?
It's really impossible to talk about money mules as sort of a standalone issue. I think it's really connects so many other forms of financial crime that it's completely interconnected. So whether you're talking about drug trafficking, human trafficking, cyber fraud, in all instances, you've got money. It all has to sort of land somewhere, and typically that somewhere is almost always going to involve a mule account. So there's sort of like the last mile infrastructure of organized crime. When I worked in investigations, it was always sort of a wild realization that kind of hit when you're performing your investigations, that these weren't just sort of random accounts. They're all sort of interconnected. And the more you kind of expand the scope, the more you start to see the connections. The bridge between sort of an online scam and a real world payout, I think you follow the money and it's almost always ends or involves a mule in some regard. So for compliance teams, I think this has to be a really central concern for them.
I want to go a little bit back to the recruitment process. What does it look like? What should be our main concern? Like who's being targeted and how?
There's two sort of scenarios that are most common, I think. One sort of targets younger folks. So kids, I say kids now because I'm 35, but in your young 20s, I still sort of think you're kind of a kid in those situations. But it's kids in their young 20s on TikTok, on social media, and they see they either get a message or they see some kind of ad, or even potentially they hear from a friend online that they got involved in some kind of, an online sort of scheme that was basically easy money for them. And, I think there's a lot of pressure, especially for younger folks just sort of starting out in their career, maybe struggling to find a job, and they're just looking for some easy money. A lot of the time, kids in that age range, they trust their friends in folks on social media more so than they trust, an advisory from a regulatory agency, right? They're not necessarily going to be looking out for FinCEN's latest advisory, but they're going to listen to their friend who said that, that all they had to do was, a quick 20 minutes of a online setup, and then they got $250 sent in their account. That's a scenario for younger folks. It's kind of, they're witting, but they don't see it as a huge kind of they don't see themselves as committing a crime. It's just sort of, maybe it's a little shady and they kind of suspect it's probably not on the up and up, but they decide to go forward anyway because they're kind of desperate. And on the unwitting side, it's much more older folks. So folks who aren't as tech savvy, who kind of get essentially tricked into sending funds in various ways, whether that's a text message they get from a number that claims to be someone that they know in their life who's requesting money, that they're in trouble and they need grandma to send $200 to this account because their granddaughter, their grandson is in some sort of trouble, and then they just, because they didn't grow up online and the whole digital sort of ecosystem kind of arose later into their life, they're not as sort of discerning, and they don't apply as much scrutiny, or maybe they're just not as familiar with the different ways that fraudsters will use online tools. And so that's really kind of the more unwitting scenario where you've got older folks who get convinced to send money because they think they're trying to help a family member or a friend.
Just reminded me of a story with the kids. My wife told me she was meeting up with some of our childhood friends out of Sweden, and there's this big criminal network called the Foxtrot Network. They actually now have to talk to their teenage kids about the risk of being recruited into the network, not in the sense that they'll go straight into committing crime per se, but to them, it's going to be recruited into money muling schemes. And, my friend here told me that we can earn 100 kroners just by receiving 1,000 kroners, and I'll send 900 back. It's super easy. And that's the kind of conversations they're having around the dinner table with their teenage kids now. It's pretty wild. So yeah, I've got my kids are 7 and 9. I'm not looking forward to what's going to happen when this evolves.
Yeah, it's pretty crazy. I mean, you hope with the generation who sort of grows up online that they're going to have an ability to kind of tell what's legit from what's kind of shady. With the older folks, you can kind of give them a little bit of a pass because they're not as familiar with they didn't grow up online, so it's all sort of still new to them. But I'm hoping at least that well, again with the advancements of things like AI, it's just these sorts of schemes are just going to continue to be further and further honed, and that's really what concerns me in terms of the future.
Can we briefly talk about the exploitation of money mules, how it spills over to the KYB space? Maybe tell us about the fake loan scams.
Money muling doesn't stop at individuals, right? So it definitely spills over into small businesses through exactly what you just described, the kind of fake loan scams and fake contracts. So I think one common setup sort of looks like a criminal group poses as a legitimate company or a lender. They advertise quick business loans online, often to smaller firms that don't really have robust compliance departments. Maybe they're struggling with cash flow. And when the business applies, the loan gets approved fast, sometimes faster than they're expecting. And so the amount that's sent is higher than was requested. And so then they're told that there was basically some sort of administrative error and that they need to return the excess amount of funds that were initially sent to them. And so, of course, that repayment doesn't go back to the lender. It goes straight into sort of a mule network. And so I think what's really happening there is it's the same principle we see with individuals. It's just laundering through kind of trust and through urgency. The businesses are essentially unwitting mules. And so they're dealing with what they think are legitimate partners often during a moment of financial pressure where they need money quickly to keep their business alive. And then that's sort of how they get exploited.
There's a bit of an elephant in the room with that scheme, because it also kind of entails that the funding partner here is part of the actual money laundering or the scheme in itself, because they're issuing a loan larger than what it's supposed to be and then informing that, hey, you need to return this amount. Because at one point they've applied for a loan somewhere, right?
Yeah, exactly. So that's what's really kind of, I guess, it's easy to get sort of pulled into those because from your perspective, from the business perspective, they're completely unwitting. They have no idea that they've been dealing with sort of an arm of a laundering network.
Interesting. Okay, we'll be right back to talk about the data perspective on this problem and how it can maybe solve this crisis. Don't go anywhere.
Live on stage at Venue 81 in Stockholm!
Want to energize your next event with something truly unexpected? Live on stage from Shoreditch Studios in London. The Laundry Live brings financial crime and compliance to life on stage, with laughs, insights, and a healthy dose of drama. Live on stage at the Ministry of Sound in London. From packed out venues to intimate in-house tapings, we've done it all. A live recording of The Laundry is the perfect way to engage your audience and bring fresh energy to your agenda. Stockholm, please make some noise! We love hitting the road, so if you're planning an event, why not add a little podcast magic? Email us at laundry@strise.ai to get started. We'll bring the microphones, you bring the crowd. We'll continue the discussion over pizza afterwards. I'm interested to learn more.
Welcome back, listener. Remember, all the laundry presenters are on LinkedIn, so drop me a message if you've got some feedback on today's episode. We've talked about the problem. Let's now look at the difference that data can make to this picture. For compliance professionals, what are some of the red flags that might point to someone being used as a money mule?
When you're trying to spot potential money mule activity, it's rarely one sort of big glaring red flag that gives it away. It's usually more of a cluster of smaller signals that, when you look at them together, can sort of tell a story. Some of the most reliable indicators and sort of red flags are pretty intuitive, right? So it's irregular, unexplained deposits, accounts that move money in and out quickly without a clear business reason, activity that's inconsistent with what you know about the customer. Location data can be a big clue as well. So if you've got a personal account being accessed from multiple countries in a short period or through a VPN, that's worth probably a closer look. You also have accounts that can suddenly start wiring money internationally, especially to higher risk jurisdictions in situations where they've never done that before. And that would also be, a pretty glaring clue. But I think the nuance is that most mules don't start out looking suspicious, right? On paper, they're just low risk customers. So it's not about spotting one transaction. It's about detecting subtle sort of behavioral shifts. And that's where the data becomes really powerful. To be able to link patterns across accounts, across banks, and across time.
It's interesting how, like, most of these money mules, they start off as low risk customers. But what are some of the biggest challenges in identifying the money mules? Like when you say they start off as low risk.
Yeah, it's exactly that, because most of them don't look like criminals, because and oftentimes they're really not, right? They're just kind of regular everyday people, at least on paper. And so these aren't people with prior offenses or, shell companies with complex structures. Like, they're just regular everyday customers, students, retirees, delivery drivers. And it essentially means that in almost every bank's risk model, they fall into the lowest risk category. And low risk accounts generally get far less scrutiny than higher risk accounts. So what happens essentially is that the people most likely to be exploited are also the ones least likely to trigger alerts. So it's sort of another challenge, is that the mule activity often as well kind of blends in with the normal activity that these customers would typically transact in. So it's small, frequent transactions, peer-to-peer payments. A lot of it looks like Venmo or Zelle, right? So it's just sort of low dollar amounts between accounts. It doesn't really stand out. But by the time something does look strange, the money's already moved sort of 3 hops down, and it's sort of made its way to its destination. then you sort of add to that kind of the issue around cross-bank and cross-border sort of nature of the schemes. And there's really no single institution that's ever going to be able to see the full picture. So each one just sort of sees a few puzzle pieces, and on their own, those pieces can kind of look harmless. But that's why the mule detection isn't solely a data problem. It's more of a collaboration and communication across institutions problem as well.
Let's move a little bit more into the nerdy tech side of things. I want to talk about predictive data models. So, where are we at with transaction data and creating good predictive models with machine learning and AI?
Yeah, I think it's tricky. I think it is possible, but I think not always in the way that you might expect. So, I mean, you really can't predict a money mule the same way you could predict something like a credit default or something that's much more sort of predictable. So I think the data is really just too fragmented and human behavior is too unpredictable. But what you can start to spot are the kind of the early warning signs. So the subtle behavioral shifts in how an account behaves that might suggest it's being sort of repurposed. So in practice, that essentially means watching for changes over time. So if a dormant account that suddenly becomes active, and then small transfers that build sort of in volume, as well as kind of what we touched on earlier, which is logins from different locations, maybe from new devices, new regions. There's also, customers whose transaction network suddenly expands to far more counterparties than you would typically expect from the historical sort of behavior. But I think the real category that sort of unlocks the predictive ability would be sort of network analytics. So instead of treating each account as an island, you model the flow of money like a social graph. So it's just like who's connected to who, how fast, how often. And I think that's where AI could potentially be very useful, because it can spot patterns and anomalies across thousands of transactions and sort of nodes that no human would be able to see in real time. So it's predictive models are certainly possible, but it's less about predicting the intent and more about predicting sort of the evolution of the risk for the customer.
Yeah, that's what I always think about when I discuss like smurfing techniques, because they always have to end up somewhere. So if you have 100 transactions, they might move into 50 accounts, but then again, they need to gather. It needs to funnel into one singular endpoint at some point in the value chain. So back to the basic principle of AML: follow the money. It's really interesting, like treating these accounts as social networks. Like the way we think about data is always entities. So it would be account as an entity, and then looking at how many people are potentially connected to that account through which businesses, etc. So, is there a silver bullet which could be used to severely impact those behind these money mule networks? What do you think?
It's tough, right? It's always a really desirable idea, right, to have a silver bullet. But I think if there were a true kind of silver bullet, it would probably look a lot like crypto, because you have sort of with the blockchain, you have full traceability and visibility kind of baked into the actual payment infrastructure and the actual rails where activities being sort of documented. So, in crypto, you have every hop is on chain, so you can literally trace funds from wallet to wallet across borders, across platforms, and you can do that all in real time. So if that same sort of level of transparency existed in the fiat world, every transfer is recorded, searchable, completely immutable. Most money mule networks would probably collapse overnight, because you have all the visibility you need, and you have no limitations in terms of your ability to see from one hop to another, from one platform to another. Whereas in the fiat world, you maybe do a few transfers through Bank of America, then you go over to Wells Fargo, then you go over to, it's only those compliance departments have their sort of line of sight into their personal activity, or that institution's activity rather. So it doesn't quite work the same. But, of course, crypto is, hasn't fully taken over the entire financial landscape yet, but you can't really just tell the world, everyone, you have to use crypto now, right? And just let the regulators seal your wallets. But I think it highlights the point that the problem isn't a lack of data, it's a lack of connected data. So in fiat systems, the money jumps from one bank to another, one app to another, the trail kind of goes cold.
Yeah, I think there's a lot to be discussed on crypto as well, with upcoming CBDCs and probably something to do there. But we have accounts as a social network. We have crypto. What about social media analysis? Where does that live within all of this?
Yeah, I mean, I think in terms of the typologies and sort of the way these things occur, social media is always where a lot of it starts. That's really a lot of the times where some of the best intelligence lives, essentially. Most mule recruitment today doesn't happen through dark web forums, right? It's like it happens on Instagram, it happens on TikTok or X, open public social media spaces. Criminals will run recruitment campaigns that look like lifestyle content or job ads. So it's like work from home, get paid to help international clients, quick finance side gigs. They even have hashtags and sort of influencer tactics to kind of build that trust. And so that's where the problem starts. So we've got to kind of treat those platforms as part of the detection ecosystem, right? Social media analysis that can flag patterns, recurring handles, reposted videos, ad copy that's sort of, identical and appears across different accounts, different platforms. And so you sort of have that metadata that can help banks and law enforcement connect cases that look unrelated on the transaction side. I've definitely seen examples where just mapping the digital footprint, who's promoting what from which regions, can sort of is given us kind of early warning signs on emerging mule recruitment rings before any money actually moves. So it's really just the power of open source intelligence when you pair that with transaction data.
I'm sure there's a good dad joke in there somewhere, like metadata or metas data. I didn't just drop that. I just dropped that dad joke, yes. Okay, my producer is writing terrible. Okay, how can all parties, financial institutions, regulators, law enforcement, social media companies, everyone work together to solve this? What's stopping the unified approach?
Yeah, I mean, I think the only real way is through collaboration, right? So, because no single party is ever going to see the whole picture. So banks can see the transactions, regulators can see all the different filings, law enforcement can see their investigations, social media platforms see kind of the recruitment sort of red flags. But right now, all of that intelligence lives in a sort of separate, siloed environments. You're looking at an elephant from different views, right? One person's got the trunk, one person's got the leg, and you don't really see the full animal until you put all those pictures together. So I think unified approach really means kind of trying to stitch those views together through privacy safe data sharing between financial institutions, real-time typology updates from regulators, law enforcement feeding back into what's sort of working and what's not, in social media platforms that are able to flag the content that's fueling a lot of their recruitment. But I think what's stopping is mostly just friction, right? It's just legal barriers, data exposure, fears, simple kind of just fatigue around what sort of effort would be required for all of that collaboration. I think everyone wants to, in an ideal world, be able to combine all those different views, and everyone wants to help, but nobody really wants to be the first to share. So I think the fix isn't just more technology; it's the infrastructure in the trust.
And probably speed of technology is a limiting factor as well, because by the time the enablers and the actual criminals have turned something around, it's already too late for the regulators or the enforcers to actually catch them. It's that old cat and mouse game.
Especially with AI now, right? Because you can even automate a lot of this activity now too. And when one sort of recruitment tactic gets a little too exposed, you can very easily spin up a new one and you can start from scratch again.
Exactly. Okay, before we end this episode, we're going to dish out some quick fire questions for you. Are you ready, MJ?
Let's do it.
What's the biggest misunderstanding of the money mule problem?
Folks think you can spot a money mule just by looking at one account or one transaction, right? Because you really can't. Mules hide in plain sight because individually their account activity looks relatively normal. It's a few deposits, a few outgoing wires. It's nothing really dramatic. So I think the trick is in the connections. So you only see the real pattern when you zoom out and expand the scope and link all that data across different platforms and different banks.
What can data tell us about money muling?
Data really tells us how the money moves, and by extension, how crime is able to scale. So on its own, one transaction doesn't really mean much, but when you connect them across customers, across institutions, across payment types, you can start to see kind of the orchestration and the choreography of the networks and the criminals that they've built these sort of ecosystems to move value through their system.
And what can data not tell us about money muling?
So data can tell you how the money moves, but it cannot tell you why the money is moving. So it won't show you the intent. It won't be able to show you the coercion or the desperation from the folks that get wrapped up in some of these schemes, right? It can't tell you if someone's a willing participant or if it's a single mom just trying to, make rent. That's where I think the human judgment really still matters.
And why does this issue matter in the real world?
I think it's really because behind every money mule is just a person, right? Someone being either exploited or coerced or just basically just trying to survive. So it's easy to treat this as a data problem, but it's really kind of a human problem at its core. And I think every transfer is really connected to ultimately a victim, right? A trafficking ring or maybe a family, losing money, losing their savings. So if we can disrupt the mule networks, we don't just stop the money moving, we can actually stop harm from spreading to the victims.
And that brings this spin of The Laundry to an end. MJ, thank you so much for joining me. Where can people find and connect with you?
I would just say LinkedIn, really. You can find me, Michael Joseph Cams on LinkedIn. I'm sure there's probably about 100 other Michael Josephs, so you have to filter a little bit. Maybe Napier AI.
Go to Napier, find Michael Joseph.
There you go.
Money makes the world go round.
Thank you all for listening. If you've enjoyed this podcast, check out the back catalog of more than 130 episodes and follow The Laundry on your podcast platform of choice. Please share the podcast on your social media channels. Tell a colleague to subscribe. Maybe give us a 5-star rating. It really helps people to find us. Got something interesting you want to share with us? Comment on the Strise LinkedIn, my LinkedIn, or email laundry@strise.ai. Your host for this episode was me, Robin Banks. Our producer was Matthew, our editor was Dominic, and our engineer was Nicholas. The Laundry is proudly produced by Strise. Visit strise.ai for more information, and see you next time.
It makes the world go round. Money makes the world go round. It makes the world go round.
This is off to a great start, ladies and gentlemen, the best start.
The Laundry is proudly produced by Strise, your AML automation software for faster onboarding, smarter monitoring, and growth without overhead.